I can't come up with anything for a long-term change of opinion on still why gold needs to be a significant part of one's portfolio. I just can't. It's hurt business, just so you know. Most people that I meet from the financial planning, they don't see that concept. They don't have the time or the knowledge to have the deep thinking that you and I do. By and large, there's nothing yet to even be mildly concerned that we've even reached an intermediate top. Yeah, there's short-term tops. There's going to be sharp corrections in bull markets like this, but this market still looks like it can still go substantially higher. And Andy, I used to say maybe we get to 2,500, 3,000, and there were guys that talked about 5 and 10, and I would say, maybe they're a little crazy. They're not that crazy anymore.
Record-breaking gold prices have frequently made headlines this year across major media outlets. Prevailing gold prices varied radically across these secular spans, from just $257 when gold's mighty 2000s bull was born to March 2025's latest record high of $3,046. That vast range of gold levels spread over all those long years has to first be rendered in like percentage terms to make them perfectly comparable with each other. Then, they can be averaged together to distill out gold's bull market seasonality. Veteran financial analyst Peter Grandich remains bullish, predicting that the long-term trajectory will remain firmly higher. According to him, the current trends in central bank buying, gold repatriation, and geopolitical shifts of $10,000 gold targets seem realistic. Regarding the market fundamentals, Grandich underscores a major shift in central bank behavior, with over 30 banks repatriating gold and increasing purchases. He notes that the BIS has elevated gold's importance, signaling a transition in the monetary system. Central banks, particularly those in emerging markets, are considered the primary buyers fueling rising gold prices. Notably, the U.S. has also been actively increasing its gold reserves. Following a staggering 43% surge in January, gold inventories at the New York Mercantile Exchange soared another 25% in February. As of Tuesday, March 25th, NYMEX gold inventories reached a record 42.6 million ounces, nearly double the level at the end of 2024. Looking at the current trends, Grandich questions the sudden focus on U.S. gold reserves, hinting at concerns over Fort Knox's actual holdings. President Trump said he would visit Kentucky with Elon Musk to see if there was gold there. Some economists and historians say this tells us more about the economy than the security of gold resources. Concurrently, Grandich warns of financial advisors' inexperience, noting that most of them only know Fed-driven bull markets. He cautions that they may struggle in a true crisis. Now we present the clips of Peter Grandich's insights from his recent interview with Andrew Maguire. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It's interesting that the change at the Bank of International Settlements coincided with the absolute blast off of central banks not only becoming huge buyers of gold, but 30-something of them repatriating their gold from the United States and London. That's all because we both know that something in the future will take place where gold is going to be used either in regional things like the BRICS or worldwide, but eventually the dollar will be replaced. But I want to go back to what you brought up, if you don't mind, Andy, about the experience, because that's one of the 10 things that I spoke about last year, and it's still on my list. So hard to imagine this, but almost now close to 50%, it's 40-something percent, I don't remember the exact number, weren't of licensed financial advisors is over 350,000 or close to 400,000 in the U.S. Almost half of them weren't born when I started in the business. And less than 40% were in the business before January 1st, 2000. The problem will always be, as I've always said, is what do they do when they start to see two-way traffic for the first time? Or worse yet, a roundabout, or what we like to call a traffic circle. I think they're going to have a big problem. And that coincides with what we said before about the herd mentality and all. And so that's the big issue out here, I believe, in the U.S., the true lack of experience. It's an amazing thing. They have no concept of a bear market. And I think we flipped 180 degrees from what I told you in the early 80s. No one wanted to own stocks back in the early 1980s. No one. That's why it was so poor for so many years. And now, of course, everybody and their mother was at the point where they were owning it. And I just think, things go in pendulum swings. So that's a big concern. But your point about the BIS, and listen, this is why I tell everybody when you only got a minute or two to talk to them about gold. They made gold as important as stocks on a world basis by the central bank's banker. I mean, you're more qualified to comment on that, but a lot of people like to say the BIS is the central bank's banker. Why did they do that? These banks aren't buying this for a trade. All this enormous known physical buying, which we think there's been more than the actual reporting, especially out of China, they're not buying it for a trade. They can't trade it to somebody else and lock in the profit. They're buying it for a significant reason, okay? Two, we saw the BRICS. We understand they're going to come up with some sort of formula to settle their trade using gold in some fashion, along with currencies or something else. We don't know what the final thing will be back. Why did all this gold start to get transferred? And why would the president of the United States, unsolicited, start talking about whether or not there's gold in the Fort Knox? I don't understand any logic in that if there's any question that it's not there, which some of us believe may not be, or to the point of the level that has been reported and all. And so all of this and this transferring of the gold and the president talking about, the secretary, treasury talking about it and all, gold's going to be used some way more than it's been in the United States. There's no question about that's coming as well. So it's all green lights. I can't, if I wanted to try to come up with a reason other than this, we've had a big move. We went from 2,000 to 3,000. We could have a 10 or 15% serious correction at any time, but maybe that starts at 3,500. It doesn't start at 3,000. But I can't come up with anything for a long-term change of opinion on still why gold needs to be a significant part of one's portfolio. I just can't. It's hurt business, just so you know. Most people that I meet from the financial planning, they don't see that concept. They don't have the time or the knowledge to have the deep thinking that you and I do. So when they go down to the street to talk to the apples and orange, I'm Apple, they go see what orange says. Orange blows up gold. And that guy's a nut. Whatever they come up with. I used to say maybe we get to 2,500, 3,000. And there were guys that talked about 5 and 10. And I would say, maybe they're a little crazy. They're not that crazy anymore.
Seasoned investor Peter Grandich points out that Wall Street has yet to acknowledge gold's rise to $3,000, suggesting its recognition could mark a short-term top. He recalls past skepticism toward gold's potential, likening it to early doubts about the Dow reaching new highs in the 1980s. The historical trend shows that gold prices have respected key trend lines. Previous breakouts led to exponential price increases, as seen in the 1970s and early 2000s. The 2025 breakout follows a similar pattern. The breakout above the upper resistance of the wedge pattern suggests that gold could see further gains. If this trend holds, gold could target higher levels in the coming years. Furthermore, Grandich also highlights that gold remains significantly underowned in North America, with institutional portfolios holding an estimated 0.5% allocation. The current gold bull market exhibits a notable departure from historical patterns, with traditional North American investors largely absent from the buying frenzy. This represents a significant shift in market participation dynamics. The lack of retail and small institutional investor involvement presents a compelling case for untapped demand potential. With record prices achieved without these traditional market participants, the runway for further appreciation appears substantial once mainstream investors return. Let's get back to the interview.
When I entered the business in the early 1980s, the Dow had traded for 27 years between 700 and 1,000. And in the early 80s, there was such a negative view about the future for stock market. There was a Russian-U.S. could go off at any time. At that time, the Arabs and the Japanese were taking over the world. And no one could imagine the Dow going much higher when this man who no one knew of at the time, named Robert Prechter Jr., came out of Gainesville, Georgia, to say that the Dow was going to 3,600. And people just laughed and scoffed at this young man, because how could something go to 3,600? It's never even really stayed over 1,000. Well, not that it only get to 3,600, but it went to 36,000 and more. And so that mentality has always also been in the gold market. Gold's just, trades here. And these crazy kooks with the tin hat, foil hats and all this stuff, maybe it'll get to 1,000, but never. We also remember a certain guy that used to be out all the time that worked for a major internet bullion house that would tell us, are you crazy? It's never going to stay up there and all. And there's no such thing as manipulation and all. And even when it got to 2,000, even some of the people that were in the market, maybe not publicly, but privately said, do you really think it can get much through 2,000? What will drive it through 2,000? They're saying the same thing now about 3,000. They really are. It's the best kept secret except for people like you and I that and some others who've seen it. And here's the last cherry on top of all of that. So you have these financial advisors, and again, Andy, I'm speaking just for the U.S. I don't watch Europe financial networks, but here in the U.S., they have talking heads on every day, and it's either stocks or bonds. It's all stocks, bonds, whatever it is, stocks. And I say to people, let me ask you something. If you went to a doctor and he gave you a drug, but you found out later there was a better drug you could have taken to make you better, would you be upset? They go, yeah. Well, those people that were telling you to buy stocks and bonds since January 1st, 2000, never spoke to you about gold, yet gold has outperformed both of them. Maybe you should look for a different doctor or a different financial advisor. And that's the real cherry on the top, Andy, of how well it's performed, despite being very, very underowned here in North America by retail and institutional investors. First of all, it's a half of 1% is the estimate of what the typical portfolio in the U.S. holds to gold or gold related, a GLD or something like that.
Yeah.
That's what it's estimated at. Wall Street continues, and I believe will always continue to treat gold as kryptonite. It is kryptonite to what they make their living off of, stocks and bonds. We saw with I call it Bitcoin, but I'll call it what they call it, Bitcoin for a moment. And we had the world's top asset manager who said 5 years ago, it's criminal to deal with it. And then suddenly, because his firm came out and became the biggest trader of it, now it's the greatest thing since sliced bread. They can't do that with gold. They haven't found a way to flip it, spin it, and derive and keep making money off of it. And what will happen, this is what I believe is the outcome. I'm hoping, obviously, because I have such large and continue. I mean, I literally told people as a financial service person in the United States in 2021 that I would liquidate U.S. equities and just own gold, because if you want a capital appreciation, forget all the other reasons, war and all that, it's going to outperform stocks and bonds. I don't think 1 out of 50,000 of my peers would have done or said the same thing. But what I think is going to outplay is, mind you, in what you rightfully pointed out about the herd mentality, as this market is rolling over, and it is, the air is being let out. It depends on how sharp and how much air comes out at once. And the Magnificent Seven aren't as magnificent as they were. And I want to talk to you about passive investing because it's a critical factor that most people don't know about. But as that happens, as the cryptocurrencies, because remember, NFTs, remember a few years ago, everybody and their mother, they're down 95%, Andy. They consider that industry completely dead. There's no hope of coming back. Mem coins, where a lot of, again, money went that would have gone into gold, blowing up all over the places. And now finally the cryptocurrencies, especially the big name one, I've said that it's reached its peak. These managers looking around and seeing not only gold's actual performance, but the companies that mine it. Andy, they are making record cash flow. They're literally printing money. And think about this, like you just pointed out, it went up $700 or from 2,300. That's 30 something percent since you and I last spoke. The expenses at the mining companies didn't go up that much. So that's that much more profit. As the regular market that they're looking at is rolling over in their herd mentality, and all of a sudden they start seeing, hey, these gold companies are making all sorts of money. That's where the herd mentality will come in and all.
Geopolitical tensions, inflation trends, and U.S. tariffs have emerged as key drivers behind the surge in international gold prices, prompting both governments and individual investors to join the gold rush enthusiastically. With gold's underrepresentation in institutional portfolios and increasing central bank demand, could we be on the verge of a major revaluation in the global monetary system? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.